Good morning, guys. It's Ian from OSBFX. It is Monday, the 17th of January 2022. It's just gone 8 o'clock in the morning in the UK. It's a US holiday today. We are seeing a bit of downward pressure in the US dollar. I managed to get out of my New Zealand dollar short trade this morning. I think we're going to see pretty high volatility. I don't think that's going to be lack of liquidity, but what we do have at the moment is a lack of US data releases this week. So let's have a look at the charts. Let's have a look at the calendar first. I'm just going to drag this in. This is the FX Street calendar, so I've extended it to Friday. China have cut interest rates, so clearly on a different plane to Europe and the rest of the world, really, with regards to monetary policy. They're looking to cut interest rates to sort of boost the economy, whereas the US and Europe are concerned about inflation at the moment and going to be looking at hiking rates. But here we've got the calendar Bank of Japan interest rate decision overnight tonight or 3 o'clock in the morning. A barrage of figures out of the UK tomorrow, some zoo survey figures Wednesday. Again, looking back or looking forward to sterling. Sterling really for me is in no man's land at the moment, so that's not of a great deal of interest. Bank of Canada, I'd like to buy dips in the Canadian dollar, but I don't know if I'm going to have to wait till Wednesday to do it. Again, Bank of England, Bailey, and then we've got some Australian figures, pretty important unemployment figures overnight on Thursday. Bank of Canada, sorry, People's Bank of China interest rate decision gone early. And then Friday, again, we've got some Canadian figures and ECB Lagarde. So really, for the whole of the week, we're lacking in US data releases. Now, let's have a look at the single currency baskets. This is the US dollar. This is not DXY. It is overlaid dollar products. Then we've got the euro, sterling, Swiss, CAD, Aussie, New Zealand, and Japanese yen. And we can see these dotted black lines on the charts. That highlights my support levels and resistance levels. So basically, off the back of dollar support last week, and it was actually the second dip that I ended up getting into, was the reason for my New Zealand dollar short. Let's put this chart up. So again, lining it up with the dotted black lines, and I ended up getting in around about here on this small pullback. I had a limit order of 86 overnight, and I think we made an 87 low, so I just cut it out when I got out of bed, which was about 6:30. So I'm out around this sort of area. So going back to the dollar, you can see the dotted line. So really, at the moment, it's going to be either selling into rallies or buying into dips. At the moment, we're in sort of no man's land. But what I do want to highlight is two chart formations here. So the first one is the 8-hour chart. So I do believe that the next leg up could be sustained up towards these sort of levels in the dollar basket. If I go to the 1-hour chart, sorry, this is 4-hour chart, then making quite a nice bat formation. But like I said, we have gone short of this level this morning. If we do push up to that level, then I will be looking at dollar products to sell into for a correction to the downside. If we dip lower and we get to this support level, then I'm obviously going to be looking at buying dollars for this move to the upside. So I do believe that price action is really going to be dominated by the US dollar this week, even though we're lacking data releases. The euro is really in no man's land. This is a euro basket. This is a daily chart. So just to highlight what's going on, or what's not going on, I should say, we have had 34 days, and that's trading days of sideways movement. You know, we have seen obviously movement in the euro against the dollar, euro against Swiss, euro against yen, but it's those counter currencies that are actually driving those moves, and it's not the euro. So the euro, I would look to sell into at higher levels, but at the moment it's just got zero interest for me really. Sterling, and again we've seen a mighty drive higher, obviously on interest rate policy. Now we're sort of in no man's land. I'd look to buy into dips, but I haven't highlighted it on here, and I haven't highlighted the euro on here because they're just so far away from my support and resistance levels. Swiss franc, I'd like to buy dips. So at the moment, what we are seeing is obviously the dollar and yen and Swiss franc will normally move in the same direction because they are risk products. So you can see that even though it was moving lower this morning with the US dollar, we're just starting to see that tick to the upside. I'd only look to buy into dips. Canadian dollar, again, look to buy into dips, but I want to get into the data releases really. I prefer to see a driving force, so that'd be quite interesting if we get down to these sort of levels before those data releases. Aussie dollar, I think that was a driving force as well again with that New Zealand dollar trade. Obviously, Aussie reflects New Zealand dollars to a certain extent, and that moves to the downside. And now we're starting to see a turnaround in the New Zealand dollar, but resistance is all the way up here. Japanese yen could be interesting. It did turn short of my bespoke resistance level, so I've got two here. Got to a 261.8% fib and turn around. But again, if I get up to these sort of levels, I'll see if I've got a pattern here. At the moment, it's looking pretty unlikely, but if yen moves to the upside, and we'll look at sort of the extension levels if and when we get there. So at the moment it's all a bit boring, to be perfectly honest. US holiday I said as well today, so we could lack any real direction, but I think my concentration is basically going to be on the dollar, and like I said, if I get dips in the dollar, I'll look to buy into those dips, and if I get rallies in the dollar, I'll look at selling into them. What I did do last night, and these pairs are starting to move away from the trigger levels, so I basically overlaid the bias. So obviously the bias being selling dollar, selling yen, buying Swiss, and buying CAD. So that makes selling dollar Swiss, but that'll be at higher levels. So up here is a really nice back formation, which is at 91.82. Starting to move away from it this morning. And dollar CAD, got two resistance levels up here. Again, starting to move away from it this morning. So sitting on my hands. CAD yen, this formation, which again is a crab pattern, but we've moved away from that overnight. And then last Swiss yen, which is probably the only one that's really looking anywhere near a decent formation, and that is down here at 123.80. So like I said, at the moment I'm sort of in no man's land. I've got out my New Zealand dollar. I will monitor the dollar this morning to see if we do get a bit of an uptick, and if that uptick gives me an opportunity to get short of the dollar for that BC leg to the downside. Otherwise I'm going to be sitting on my hands for quite some time, I think. Okay guys, good luck, and I'll speak to you again soon. Many thanks.